Welcome to our daily Forex market analysis, and this is for trading on May the 28th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. So a couple of things that happened today. First of all, Euro here, we did see ECB actually announced a package of 750 billion euros for stimulus, and that is positive. And as a result of that, we saw we saw Euro take off to the upside, and it got stronger. Other than that, we also saw some back and forth between US and China earlier in the New York session, and as a result of that, equities dropped a bit, but overall the risk sentiment is still positive in the markets, in the equities markets, and we have seen the equities actually recovered all the losses and they closed higher. So we are still in a very much of a positive risk sentiment, and we have seen that going into the month and over the last few months, the stock markets have actually closed in the positive. So we have 2 more days to month end. Friday is the month end. So we're likely to see a further move to the upside in the equities, which means we may see positive moves in our dollar crosses as well as in yen crosses as well. So that's what we have going on. We also have there were comments from US in regards to basically saying that Hong Kong is, because the Hong Kong will be under Chinese control now, it is not an autonomy like it was before, which means they will have the same type of tariffs and regulations now from US side as China has. So they're going to lose the special status that was there for Hong Kong previously, because it was basically independent, and now that it's not going to be independent, it has to follow the same rules that will apply to China. Basically China said something about not being happy about it, and they may retaliate if US actually interferes in Hong Kong. So right now market is ignoring that. So overall we are back into risk positive mode. So let's take a look at what's coming up here. We do have business confidence numbers here for New Zealand, as well as capital expenditure numbers. So lately the confidence numbers have been coming out positive. We have seen from other countries as well. We have seen the business confidence numbers as well as the consumer confidence numbers have been positive, and that has to do with the economies opening up. Also in the US, we saw Disney has announced that they're going to open its parks next month, and also many different hotels in Vegas announced that they are opening back up again on June 4th. So all in all, things are looking very positive from that respect. In terms of data here, we have a ton of data coming up on Thursday, and we do have MPC member speaking earlier in the London session here, and then in US session, we have GDP numbers, which are expected to be negative. And so right now, the negative numbers are not making much of a difference. But if the numbers come in higher than expectations, that is causing more of a positive move in the market. So any numbers that come in above expectations are likely to move the market more than any of the negative numbers. Now we have durable goods orders as well as unemployment claims. We're looking at about 2.1 million in terms of unemployment claims. Now, if the number is better than this, that will be good for the stock markets, and we could see the stock market go up, which means the dollar crosses are likely to go up with that as well. Negative numbers, like I said, may not have that much of a negative impact. And then we also have Japanese data here, core CPI numbers. from Japan. So with Japan, Bank of Japan has been constantly been coming out and talking about additional stimulus. They have been talking about what a negative impact this is having on the economy. So essentially trying to talk their currency down. So if the numbers actually are below expectations, we are likely to see a negative impact on Japanese yen. And that's it. So let's go on to our charts now. We'll start off with euro dollar. We see that euro did drop initially. However, with that ECB announcement, there was this big move to the upside. So part of this got filled now. But later in the day, we did see the stock market turn around. And with the stock market turning around, we did see euro go back up as well. So right now, this is looking positive. And if the risk sentiment stays positive in the stock market as well, we're likely to see euro go up as a result of that. So bias here is bullish for euro, but just keep in mind prices into resistance. So if it doesn't break today's high, we could see it turn around. But bias is bullish. Next target is 1.1050 and then a 1.1100. So bullish bias here for euro dollar. Pound dollar here, we did see British pound drop because it was into resistance here. So today we do have a red candle close. So with British pound here, the reason it's been bearish today has to do with the Brexit negotiations. So we did hear that the Brexit negotiations were not going so well. They are still not able to come together on the different issues, and European Union has said essentially that if UK wants an extension on the deadline, they need to basically apply for that now. Sorry about that. European Union has said that if UK wants an extension, they need to apply for it. And UK is essentially saying we don't need an extension. We are just delayed by 2 or 3 weeks here. So we'll see what comes out of that. If the negotiations don't go that well, we are likely to see a further drop in British pound. So right now, the bias is bearish. But if the risk sentiment, so there are two different things that will come into play here. One will be the risk sentiment. Second will be the Brexit negotiations, as well as the negative interest rates that Bank of England is moving towards. So overall, this is why British pound is weaker right now. So if tomorrow we have an MPC member speaking, so if they're still talking about negative interest rates, we're likely to see British pound drop. But it will be a tug of war between the risk positive sentiment as well as negativity from or weakness in British pound from those Brexit negotiations as well as negative interest rates. So we'll have to see which one wins out. But bias here is to the downside. What we'll have to keep in mind is if it doesn't break the low from today, we could see it go back up towards the top of the range. So watch out for that. For now, though, bias is bearish, and target here is 1.2170. And then second target is 1.2080. So bearish bias for British pound here. Aussie dollar here. For Aussie dollar, we did see Australian dollar drop today. So with Australian dollar, we have sort of the geopolitical stuff going on with China. So China has put some tariffs and sanctions, or tariffs, I should say, on the products from Australia. So before they were targeting barley and some meat products, now they are going after coal. So the agriculture products don't make much of a difference because they're only worth about 2% in terms of trade, but coal will make a difference. So if the Chinese government passes the tariffs for coal, for Australian coal, that will be negative for Australian dollar. So we'll have to keep an eye on this. So for Australian dollar, again, we have two different things going on here. We will have the positive risk sentiment, which is likely to push it higher. And then on the other hand, we have the tariffs from China, which are likely to weigh on Australian dollar and make it weaker. So this one, bias is neutral. We just need to see again which one wins out. But overall, any of those tariffs will be negative for Australian dollar because it would mean less exports, and that is a bearish thing for Australian dollar. So for now, I am looking for a potential retest of the low here of today. If it holds above, then basically I will look for a move back up here. So for now, bias is neutral for Aussie dollar. Now, if it doesn't break through the support here at 0.6570, I will look for a move higher. But should it break through, though, we could see a drop further, 0.6500. So neutral bias for Aussie dollar for the time being. This one, New Zealand dollar as well, this one is looking neutral as well. We saw price come into support. It wasn't able to break through the support, so it has bounced off of that. So right now, the bias is neutral. And with this one as well, I would look for a retest of the low, and if it holds above, looking for a move higher here, especially with the equity markets going up. Australian dollar and New Zealand dollar tend to go up with the risk positive sentiment in the equity markets, which we are seeing right now. So keep an eye on that. So for now, bias is neutral. And I'm just basically looking for it to go back into the high of today, which is 0.6225, and then if it goes higher than that, 0.6280 will be the second target. So for now, neutral bias for New Zealand dollar. Dollar CAD here, we do see that price held below the previous support resistance level. It did a retest, and then it has held below. Now price is into support, so that's something we have to be mindful of. This is where we are, and bias is still to the downside. Now with the Canadian dollar, we have to be careful with oil because oil dropped today, and if we see that it drops further, that will be negative for Canadian dollar, which means dollar CAD could go back up. So for now, bias is bearish, but for that to continue, we do need to see a break of the support. So once price breaks through the support, then I will look for a further move to the downside. So bias is bearish, but with caution here. And in terms of the targets, the first target is 1.3680. And then the second target here is 1.3620. So bearish bias for dollar CAD. Silver here, silver is trading in a range still. Now we did see a bullish move to the upside here. So in this case, it's kind of going back and forth between risk on, risk off. It hasn't quite found its footing yet. I am neutral on this. What could happen here is we could see a drop into 17, and then it may bounce off of that. Today's candle close is bullish, but as we can see, price is into resistance. So this is where I would be a little cautious. So for now, I am looking for this type of a move, a bit of a pullback, and then a further move to the upside. So keep an eye on that, but it could also totally turn around and come back into 16.80. So I'm kind of neutral on silver at the moment. Gold here, we did see gold drop, and then it has pulled back since then. So for now, this one is looking neutral as well. We may see this go back up into 1720, but if it holds below, then chances are we are going to come back towards the support level here at 1690. So bias is neutral for gold. Oil here, oil had a nice drop today. We saw that price wasn't able to go through the resistance. It has broken through the support level here. So bias is bearish. We have a nice bearish engulfing candle. Next target here is 30.80, and then below that 29.80. So bearish bias for oil. Copper also looking bearish Next target here is the low of today, which is 1.32. And then should it drop below that, we're looking at 2.30. So bearish bias for copper. Bitcoin here wasn't really able to go through to the downside here, and we have a nice bullish candle close. So bias is bullish. Do keep in mind it's coming into resistance though, so watch out for that. But bullish bias here, next target is 94.80. But if it doesn't get through this resistance at 92.50, it could turn around here because it doesn't really have it doesn't have a trending move at the moment. It's just been going back and forth in this big range for the moment. So because it's rejected the low, I'm looking for price to go back up at the moment. So first target is 92.50, and then second target is 94.50. So bullish bias here for Bitcoin. Stock market here, S&P 500 looking very bullish. We did see that initial drop basically because of the geopolitical tensions, and now we have seen a close above yesterday's highs, and it's still looking bullish. Like I said in the beginning here, we did see markets close up into the month end, and we are basically coming into the month end on Friday, so we may see further moves to the upside. Watch out for that. Bias is bullish here. Next target is 30.70, and then above that we're looking at 3100. So bullish bias here for S&P 500. Nasdaq here, Nasdaq has gone all over the place. There was quite a drop to the downside here, but it has pulled back up. So this one may turn back up as well if the others keep on pushing higher. So for now, I will look for a bit of a pullback into 93.50, and if it holds above, chances are we are looking for a further move to the upside. But if it breaks through that support, it's likely to drop back down towards 92.30. So for now, I'm neutral on Nasdaq. Dow Jones here looking very, very bullish. It's broken through that resistance. It's filled or almost filled that gap back in February. This is where it dropped from, and now still looking bullish. Next target here is 25,730, and then 26, almost 26,000. So bullish bias here for Dow Jones. DAX here looking very bullish here. This one picked up the positive risk sentiment as well. It is coming up into resistance, but looking bullish here. Next target is 11,920, and above that we have 12,000. So bullish bias for DAX as well. FTSE here, FTSE did make a move higher as well. It is into resistance, so that's something we have to be careful about. UK with currency as well as the markets not as strong, but still this is bullish here. Next target is 62.30, so FTSE is looking bullish as well. And then coming up into Nekkei here, Nekkei of course made a big move to the upside, still looking bullish. Next target is 21,750, and then above that we have 21,880. So bullish bias here as well, and it can go even further into 22,000. So bullish bias here for Nikkei as well. All right, so that's it for today. Have a wonderful trading day, and I'll be back again tomorrow. Bye for now.